Welcome to the Saxo Market Call. Before we get started, it's important we emphasize that the views and opinions expressed in this podcast are those of the host and guests and do not constitute investment advice or recommendations. All information provided is for educational and entertainment purposes only. Hey everyone, it is Thursday, 13th of November, 2025. It feels like a lot is going on here to get through. I think some despite a very unchanged almost session on the S&P 500, we're getting some pretty interesting signals. We've talked a little bit about the rotation into some of those more defensive sectors, especially healthcare doing well. Have some interesting little signals from the administration. I'll get to that as well. Stimmy checks on the way, it looks like, according to Besant, funded by tariffs, which the Supreme Court, I guess, threatens to, say are not legal, but let's see. And even more. Again, I'll get to that in a minute. Just want to go through a couple of things on the performance. So yes, S&P 500 essentially unchanged, NASDAQ 100 slightly lower, S&P 500 equal weight up small. I actually didn't register what the AI basket did on the day. I believe it was negative, quite negative. And we're getting close to the lows on the AI bubble basket, or our basket of AI stocks that we put together since October 22nd. But I think the notable thing to talk about here is the divergence within some of these stocks. If you look at the worst performers, you got Oracle, and it was really that Oracle move off the back of that crazy earnings report and declaration that they're going to create $500 billion, or was it $300 billion, whatever it was, of data centers. It's down 22%, over 22%. Meta down 19%. And you can argue we have a theme here developing of the those that are sort of the, what would you call it, the miners of intelligence. In other words, the ones that need to have this data center capacity to crunch their algorithms and try to find something out of it from which to make profits. And all that spend is going to the pick and shovel owners, who are the hardware people. So, of course, NVIDIA's performance is not particularly remarkable over that time frame, but AMD is the star among those 24 stocks in the basket, up 66%. Got a fresh rise recently here on the noise about increasing and accelerating its growth. What else do we have? Micron up almost 63%. Lam Research up almost 40%. KLA 10 Core up 24.5%. So some of the best performers clearly on the silicon side, the hardware side of that. So that is the theme for now. And the big test, as we talked about yesterday and maybe even before that, is the NVIDIA report after the close next Wednesday. So just really critical stuff there to see if this sort of just like nuanced differentiation within the space continues or the whole space starts to go up or down. I'm quite curious to see. Also down, Oracle, and specifically in yesterday's session, Oracle down quite badly, one of the worst performers on the NASDAQ 100. Noticed, and I don't know what's going on here. I'll maybe need to dig into it. I think Palo Alto is up pretty soon, maybe next week. But Zscaler and Palo Alto Networks were the two worst performers among the NASDAQ 100 stocks. All right, so maybe connecting a little bit with you here in the studio, Ole Hansen. We have this Gimme a stimmie check signal from the Trump administration talking about giving $2,000 check for anybody earning under $100,000 funded by tariffs. There's even talk from Besant about any child born could get a $1,000 ownership in U.S. stocks. So we talked about, if AI replaces people that are working, what can people do? Maybe they can't earn an income, but they can get free capital as well as free income from the state. I guess universal basic income and universal basic capital in the form of stocks. Kind of an interesting signal. But is there any connection in your mind between the shutdown ending and these types of signals from the Trump administration and this? We're talking about a ripping comeback in precious metals here. Take us through that.
Well, I think the answer to that, John, is a resounding yes.
I kind of set you up there. Sorry,
yeah, you did
I kind of
indeed.
stole your point.
I think you would have been surprised if I said no. But absolutely, we're getting a reopening, and with that, we're also getting more clarity about what economic data, if they actually are going to come through. I think there's They were talking about yesterday some data may have been lost forever, but now let's see. But the market is basically speculating that the economic data, incoming data, is going to be on the weak side. Rate cuts are coming. We have a new central bank chief probably being announced fairly soon. That could also add to the sentiment that rates are going to come down, perhaps even lower than what can be justified, given current price levels. And then on top of that, these stimulus checks, it just, once again, just highlights the predicament of the U.S. economy and its inability to bring down its debt, and that debt focus is one that that investors has been looking at and focusing on for a while now, basically seeking some kind of protection in hard assets. So yesterday we saw across the board increases led by silver, as you mentioned. We have done a 15% drop and a round trip back to the highs within the last 3 weeks. It's just a phenomenal recovery we're seeing there, much sooner and much faster than what I expected. Gold is doing its heavy lifting as well, back above 4,200. Still a bit of space before we hit their highs. But again, considering that we had such a big correction that we are straight back up, it just signals a market where the demand is still there.
Yeah, I think we cut through the last of the major Fibos. I believe it was just below 4,200, and
Indeed.
now we're well above 4,200. And I forgot to mention just a little bit on I wonder if this could feed the precious metals rally further, but we have a U.S. Treasury that is well stocked with funds. We're talking about over $900 billion the last time I looked at this Treasury general account. Maybe ready to splash some serious cash ahead of the U.S. midterms next year. We're not registering any liquidity, positive liquidity news in Bitcoin. We tested below 101,000 this morning before bouncing there. I always like to use that as an indicator for risk sentiment. But I wonder, Ole, I mean, I'm fully on board with the irresponsibility of the fiscal response to the U.S., but I wonder if the Fed could get worried about inflation. I mean, the time schedule here is very compressed. If we start to get these stimmie checks, and that could be not until a lot of cash being splashed in Q1 more than coming up. But this December FOMC move looks very, very balanced, still 50-50, and seeing that a lot. And then you're not seeing any reaction in the long end of the U.S. Treasury market just yet. So still some caution there. Still, the rates are still very, very range bound. So I fully agree with your scenario, and maybe gold and silver can go up regardless. But I wonder if what's going to happen with these rates as well. Bloomberg noting in their morning report this morning is massive interest in buying upside in treasuries, so downside in yields at the 4% level. So curious to see how all this comes out.
Absolutely, and I think the inflation. If we see job numbers continue to deteriorate, then perhaps they are going to allow inflation to run a bit hotter than previously expected. And if that is the scenario, and rates are being cut at the same time, then that is really a signal to buy into our hard assets. Just on the demand side, there's also been some reports in recent days that Tether, which is obviously the issue of the USDT stablecoin, has accumulated almost $9 billion worth of gold. And they continue to do that. It's something like a ton a week they're buying. I just need to get those numbers clarified. But $9 billion worth of gold they're holding now in Swiss bank vaults. So not only are we seeing demand for gold from central banks and asset managers around the world, the crypto space is also hotting up, basically having that as an alternative, holding that as an alternative to U.S. Treasuries that needs to be to back these stable coins. So that's, I think, also an interesting angle. Finally, as I said, the rally yesterday was broad. It was not only gold and silver, also platinum and copper raised higher. I think the copper story is once again, just like we had in April, May this year, where the AI craze briefly sent copper's price sharply higher because investors were looking for an alternative to AI, having feared that they may have missed the rally. They started to buy into the copper space. I think we're seeing some of that coming back again because we're also getting reports and seeing these pictures of empty data centers basically sitting there. They're built, but they're not functioning because they don't have the power, and there's not enough power and power cannot be delivered anytime soon. And that basically just highlights that we are up against the new world is up against the old world, and the infrastructure that is required to ensure that the light gets on is turned on, and the machines are turned on. We're not there, and that basically requires a lot of investment into infrastructure, and that's where aluminium, copper, steel, whatever has a meaningful role. So I think that's also part of the story for copper. We've been highlighting this for a long time, but now we're seeing the actual restraints that the lack of infrastructure to deliver the power is adding on this whole AI craze story.
Yeah, and as I mentioned, I think it was yesterday, this whole data center story, it's really spreading as an issue. FT with a big read, or at least a read on it today. I'll put the link in the John J. Hardy podcast, as well as Jensen Huang himself of NVIDIA saying China's going to win. They have the capacity to drive massive data centers, but I don't think you're going to see the hyperscalers in the U.S. putting a single data center there. We know why. It's geopolitics. So a critical issue. Commodities are part of it, but also just the build out and then what fires it, and that would be a natural gas turbine. And as mentioned recently, those are booked out to 2028, 2029 at full capacity. Maybe there's some Chinese suppliers that can come on a bit more rapidly, but this is a key issue.
And you don't build a nuclear power station overnight.
No, the whole nuclear issue, we know that is the long term, but the long term just keeps getting longer, it seems like. But definitely a very interesting.
And then adding to that, we just have this the IEA yesterday doing a 180 flip.
On fossil fuel demand.
Yeah, it was expected, but they're now seeing no end in sight for demand growth in oil, at least until 2050, which is the observation period that they're looking at, and that was basically revised from peak oil in around 2030. So they're now in line with other major forecasters, and the demand is just continue to the world's hunger for energy, and especially in the coming years for power is really a significant story, and it just once again raises the prospect for the contrarian trade being the energy sector. We are seeing energy price under pressure. Brent crude had on WTI collapsed yesterday, not collapsed, but they had a 4% tumble after OPEC also flipped their forecast, short-term forecast, to a surplus from a deficit. And we just had the IEA out this morning, even doubling down on their expected surplus in the coming months to a fresh record. So no doubt the oil market will be under pressure, will be weighed down in the coming months. But we just have to remember that someone needs to produce the thing, produce energy and produce oil and produce gas. And if the price is too low, the profitability is not there, are they going to do that? And that so we have a conundrum here, which I think eventually will lead to higher prices simply because they have to go up in order to ensure that we have the production that is required to meet this kind of demand that is being forecasted.
The investment to sustain that production is the key pit there. And it's just, you can smell as well. It's just so ironic because we have these extremely low energy prices when you look at where inflation has gone. I mean, if you inflation adjust this stuff, we're talking about very cheap oil prices and gas prices for the most case, at least for the U.S., and you smell the desperation in the Trump administration, and they've just been extraordinarily lucky to one degree, but B, they've also this energy price is geopolitics. I mean, these OPEC production surpluses are all about aligning with the Trump administration. So, but they're at rock bottom in my view, unless we go into recession. In which case the glut gets a bit worse. Yeah. But
one early sign that the market is starting also is catching on to this is simply that if you look at the percentage performances here between crude oil, Brent, and something like the MSCI European energy sector, the gap between the fall in crude and the actual rise we're seeing in that sector is at almost a historic level. So there's really been a massive divergence between crude oil price going down, but the energy sector actually holding up, showing a small gain. And I think it's part of the story that the lower the price goes, the bigger the rebound when it comes.
Okay. Finally, just a small note, Ole, if you have a second, on soybeans. I saw a headline that China is apparently not booking the types of cargoes that were anticipated, now that we have this trade truce with the U.S. in place, supposedly. But soybean prices were hitting a new local high, at least the soybean future contract I look at. Is there any spin there?
Simply that there is still elevated hope that the big orders will come in soon to ensure that soybeans are not left rotting in the fields. Obviously, U.S. farmers have quite a big capacity to store, so maybe we won't get to that. But it is at a critical stage simply because so much soybeans is normally sent or exported at this time of year, and so far, and China being the main buyer of that soybean, so far they have been absent. So really is a big one to focus on. And just finishing off the grain sector, we are going to see apparently the first USDA's WASDE report, hurrah, in 2 months tomorrow. And it's coming at a critical stage because normally the October report, which was cancelled, is one of the most critical ones because that's really where you get a firm feeling for the production level and yield levels and what you can expect in terms of inventories into the winter. And now we're getting the November report allegedly out tomorrow. At least I've seen forecasts for the expectations. So let's see. So it could be quite a volatile late Friday session that we're going to face tomorrow.
All right, cool. Thanks so much, Ole, and we'll get along to the macro and FX space. Lots going on there. The dollar really appears on tilt this morning. We kept seeing, for example, euro-dollar crawling higher, even though dollar-yen seemed to want to tease that 155 level and even squeeze higher. And the dollar picture was a bit mixed and sluggish, but it seems to be on tilt here. And I don't know what degree this was the Chinese renminbi move overnight. Normally, you see pretty close lockstep moves between dollar and CNH, the offshore renminbi, and you don't see this this cross moving that much. But especially late in the Asian session, a big move there, and I think that might have been part of the driver here. In any case, dollar's on tilt until proven otherwise. Trying to connect it thematically with what all the other stuff is going on, I'm struggling a bit here, to be honest. As the stimulus, etc. But in any case, that's euro dollar above 116, and especially if it sticks a nice big move above 116, more like 116.50, closes above there, and starting to look like the dollar picture may be shaping up a bit more negatively here. Dollar yen is going to require an awful big sell-off there before I'm interested in trying to talk up the potential for yen strength. But if I connect that with bids for U.S. Treasury yields to head below 4% for the 10-year, maybe there's something there. But once it gets to there, it seems like as long as risk sentiment and volatility are low globally across asset markets, the yen has a hard time getting any kind of traction. So just like lost in the forest, or what do you call it, a walk in the desert for yen bulls for sure until proven otherwise. Elsewhere, we saw just like absolute max negative news for sterling, and yet cable manages to rally after a small sell-off this morning. What was that absolute maximum of news? Well, there's all this leadership challenge business going on supposedly within the Labour Party. I don't know how to quantify that, the odds or anything else, but it's supposedly causing some unease. And this is a horrible timing for that because we have to wait for this budget statement at the end of this month, November 26th. Meanwhile, we had a weak GDP number, missing by about 0.1%, both on the quarterly and year-on-year stuff, or year-on-year rates. And then the manufacturing production was weak from the UK this morning for September. So, yes, we're seeing euro sterling towards the highs. Sterling Swiss is hitting record lows, at least in the daily close yesterday. But cable not getting traction to the downside. So weak sterling, but not necessarily weakest in class. Elsewhere, Euro Swiss, keep an eye on that one. 92.06, this sort of low 92s is an area that is seen as being defended by the Swiss National Bank over the last, let's call it a couple of years, maybe 92.50, a little bit before that. That is the absolute low there, and it's been touched on a number of occasions, the 92.06, 08, 92.10 area. So we're working close to that. If that's not defended, and we're heading, especially if we're a bit risk off elsewhere, yada yada, there could be a potential for further Swiss franc strength. I didn't fully go through everything I wanted to earlier. Just a couple little notes on the whole Gimme a stimmie theme that hotted up because that's very British of me to say hotted up. Sorry for the Americans out there, but sorry, not sorry, because you can't open an account with Saxo anyway. It saw some interesting consumer names picking up. The idea being that people would splash out their stimulus checks on. I saw Nike stock was up quite strongly. I didn't see any approximate reason for that other than maybe this stimulus check business. Would have thought maybe this would feed into the crypto space because you have to imagine some of the young men especially might be interested in just tossing it into gambling, sports betting and Bitcoin. Who knows? Thought I'd mention that. And then as well, earnings up today. We have Disney before the open. Interesting consumer name. How are they performing in terms of their amusement park visits? There's been a lot of words, at least anecdotal stuff on the parks being quite empty and their cruises. Who goes on a Disney cruise? I'd really like to know. And of course, their streaming business, perhaps most importantly. Cisco up after the close today. And then, no way to quantify this, but I think it is it is a political crisis for Mr. Donald John Trump. And that is the Epstein case and the latest headlines with bits and pieces from emails. How much did he know Epstein? The interesting thing to me is there ever going to be any gotcha on the whole angle of his? Well, of course, there's the overall depth of the relationship with Epstein, which is problematic, and I'm not going to speculate on that. I don't know, and the speculation as well on whether he was involved with and perhaps being blackmailed by Epstein on activity with and relationship in connection with underage girls, etc. My understanding from a long podcast I had, and I didn't want to pass it along because I just don't know how to deal with all this stuff, and I don't want to get painted as being too political, is that the risk potentially for Mr. Trump is less on that side. So the pedophilia stuff that Epstein was involved in, and more on the money laundering, because Trump may have been used by Epstein. The speculation would go as for money laundering transactions because of his connection with real estate, which is one of the huge, the biggest ways to launder money there is in the United States and elsewhere. So who knows what can come up, but it could suddenly become kind of like this slow burn crisis, and it could become a raging crisis, especially I would believe if that angle crops up. I don't know who is privy to that type of information, if it's been erased, where it is, because the idea was also that Epstein was a useful tool by intelligence agencies for all kinds of financial transactions, and that was those may have been erased. Anyway, again, you can go down that rabbit hole if you want to. I'm not going to provide any links or anything else. I just think it's needs to be mentioned because it could become a sudden crisis moment or crisis tipping point for Trump. Briefly on the links for today, again, that FT article on the data center as the key limiter. When does this get recognized by the market? If you can sell all the chips you want, but can they be plugged into anything if there's no data center to run them? I think that's, even assuming that there's not going to be a problem with the need to build further data centers, if they can't be turned on, that's a huge issue. There's a very negative article, on Rubicon, a Russian outfit that is apparently starting to get the upper hand in terms of mobilizing counter-drone forces against Ukraine, a risk for the Ukraine war effort. And how does the EU especially respond? It doesn't seem like the U.S. wants to step up anything, although Trump is irritated with Putin, etc. I'll send an update as well. I'm trying to get out most days the FX Trader piece covering the FX market. Today covering all the stuff I mentioned earlier, including Aussie and Aussie Kiwi in particular, which I forgot to mention earlier in my FX rundown. And then just wanted to tout the Viking Therapeutics stock we mentioned back on September 3rd. It's up around 50%. So that Druckenmiller buy and the news about his buying that company turned out to be a good one, at least for this type of time frame for 2 months. The question is, I think one of the key hopes for this company is their obesity pill. Yes, they have other things in the pipeline, but this obesity pill business is kind of interesting because it seems like a lot of companies, this one, Novo Nordisk, Eli Lilly, and I think even Pfizer moving into that the company with the name of which I'm forgetting, Metsera, I think it was, that they acquired, also working on an obesity pill. So it's going to be one heck of an obesity pill a competition down the road. Then something about nuclear rockets, which I'd never even heard of. The question is, do they fry the people, if there are people in the space capsule, if they're used? But I guess they could be used for non-human missions. And in-game macro on Bitcoin as a useful liquidity valve. I thought that was an interesting angle on Bitcoin. All right. Geez, that was a lot to cover today. We'll end it there. And very interesting to see how things shape up. Lots of crossfire in these markets. And we'll be back tomorrow with the next Saxo Bank A.